Today's video is about sovereign wealth fund deployment in United States. And what that really comes down to, the building that I'm in right here is owned. It recently traded to a Qatar company. So you're talking about Class A hospitality. And you really want diversified funds, not just one asset group. As you grow and you learn more about real estate, you start to realize that you really don't want to do business with anybody but the biggest. And so I'm in a billion dollar building. And let's see what that. So my building is owned by, it's called I have to look at this. It's so hard to read. It's okay, we're going to type it in here. What do you know about AI Rayan tourism investment? What do you know about Al Rayan tourism investment co? Wholly owned of that, headquartered in Qatar, real estate development, acquisitions, and leasing with the primary focus on the hospitality sector. Is it a sovereign wealth fund? Let's ask. It's not a sovereign wealth fund. It's one of the largest privately held diversified groups, Qatari family hospitality. Key differences: private family office, profit driven, strategic family investments controlled by Al Faisal Holding, private and group capital. Do they own anything in Miami? Their name is on my building on a plaque. Two prominent luxury properties: St. Regis, which it purchased in 2014 from Starwood, and the W, acquired in June for $64 million, 148 rooms. Now, if you look at the price per square foot back then, 38 condominium hotel units. And so who are they compared to Senyar Holdings? Senyar Holdings has her name all over this building. Qatari entities in investment differ substantially. Arctic was founded in 2003. Senyar, it could be in a United States based firm. This is just, now these are Qatar. So these are Qatar companies, and you can see that they own things. Now, what we know is that they align with a major flag, and the hospitality industry is the highest income earning, but it's not as big as other industries in sectors, especially growth in United States. So one of the things that I'm from Ohio, and we have bigger mega projects in South Florida. If you study development, you have to really bring it down into, why would I invest in Ohio? And so that could be in build to rent, that could be in industrial, you have to look at not only trends in the United States, but also in major markets like Miami. That's very far ahead. What development trends are we seeing in the United States? And how can we apply that to strategies that we're doing? So I'm considering going to Dubai, and my investment thesis is that I believe the right group would invest not only in Miami, but also in other states where the returns could be greater. At the end of the day, firms are seeking diversification. And so access to ultra luxury as well as affordable is a big part of it. So, how do we prove that? What are the largest deals in United States history? We're talking about triple P deals, which is partnering with governments. This is almost like government contracting. Mercedes, largest social infrastructure, 1.3 billion. That was with a university. Skyway, a lease. Indiana, leased its tollway. George Courthouse, 400 million. Hudson Yards. What about affordable housing deal in Miami? That's bigger than all these. There was recently a transaction right here, which these are large. You see this collaboration, SG Holdings, and it is a joint venture, and it's a collaboration with the county. Now, what you don't see, that is because, why do you think it's a JV? Because of land valuation. So why would someone, that's a $600 million land play. Land valuation is why they are JVs. Land control and public contribution. They own the land below market value. Development value in high demand areas can be worth a lot of money. Instead of selling it, they can contribute it if we bring the capital and the execution. So in these examples, these are the different types: LIHTC deals, TIFs, soft loans, bond proceeds. Splitting equity allows it. Political optics and long-term control. Keeping the land, the county retains future leverage. Magnus Brickle. The deal, land from Miami-Dade plus a new K, transit-oriented, a textbook JV. I have a deal that we're working on right now for an 88 master planned mixed-use community like this that models something like this. And which ones are over 1 billion? We're only looking at $1 billion deals, guys. Not, this is how many square footage is, how many square feet is, and how many units. And that's the only way you're ever going to get here. You have to look at it. That's 1 million square feet, almost 2 million square feet. Okay. The building that I'm in, how many square feet was Icon Brickle? The building I'm in, it's probably one of the largest developments ever. Total square feet of everything, including parking. Probably 4 million or 5 million square feet. More than 3 million square feet. I think each building's at least 1 million square feet. One of the largest mixed-use developments in Miami. Is it larger than those billion-dollar deals? You need two things for billion-dollar deals: land, Icon 3 to 3.2, and you see the number of units by related group, right? Which is who's doing these other $1 billion. So even back in 2008, since 2008, Related has put their name on and sponsored deals that are more than 1 million square feet. And that's my investment thesis. And that doesn't come with just a little bit of land. We do land development. This whole point's Miami development. So physical size is larger. Jackson Health, Icon, Little River, 7 to 10 million. Upland Park, it's got to be over 1 million. This is literally nothing. And sheer size even beats multi-billion dollar. But if you're positioning a new master plan to sovereigns as a scale comp, it's smart, especially if you're matching or beating it in acreage, unit count, and vertical program. I think Related today is different than Related in 2008, where now they develop affordable housing. So they have an affordable housing arm. Back in 2008 was luxury condos, Icon, these, right? Fast forward, under George Perez and now John Paul Perez, distinct verticals. Related urban is affordable and workforce housing. Now they do urban and you can, but what we're seeing, if you look at the deployments of billion-dollar land firms, which there's only one, Forestar, the largest land machine in United States history, with control of more than probably 50,000, I'll say like 20,000 acres at a time. Related development for multifamily, related ISG international. Why they went affordable. Market rate alone is cyclical. PPPs is very stable. It's a lower risk class. LIHTC, live local, and those political clout, affordable deals are more and land access. Institutional level LPs and sovereign funds are hunting yield and ESG wins. I don't know what ESG is. What is ESG? Environmental, social, or governance. Sustainable, affordable, transparent, ESG. So ESG plus PPP is the best. Can you back it up with sovereign wealth fund backing in US? What are sovereign wealth funds investing in these types of projects on the development side? That's our proposal. ESG with PPPs, an attractive investment model that aligns well with strategic priorities of sovereign wealth funds. Sovereign wealth funds are increasingly integrating ESGs into their investments. 75% had adopted them with a 30% carbon emissions. PPPs offer opportunities to invest in projects that deliver both financial and positive social or environmental outcomes. By participating, they can support infrastructure development that align with ESGs, such as affordable, renewable, and sustainable urban development. Abu Dhabi's energy partners partner with them, $25 billion in infrastructure projects, powering data centers and cloud computing. Norway, sovereign wealth funds, ESG, and companies and projects that meet stringent environmental and social. For developers and public entities, structuring projects that combine ESG with PPP can attract substantial investments from sovereign wealth funds. These funds seek long-term stable returns and are drawn to projects that demonstrate a commitment to sustainable and social impact. Now, if you take those and you put in the overlays of tax benefits, which at its greatest core, a 4% LIHTC deal, these are the least competitive affordable housing deals. So, combine that with 4% LIHTC deal. Or can you show where the largest LIHTC deal funds are available in the United States by state? I don't know if LIHTC is state or federal. We're still getting into how to structure developments. Let's see here. That wasn't my question. It didn't answer my question, which was LIHTC deployment by state. State allocations. It's federally governed and Alabama. What is the total LIHTC? And is Ohio in the top 5 states? Ohio is barely behind all these other states that these people are investing in. This thing can't answer. LIHTC deals by state. Let's see here. Qualified allocation plan. Some states offer that. Federal versus state. Build upon it and separate it. So let's just look at recent LIHTC news. Bipartisan House bill would expand low-income housing tax credits. Leveraging LIHTC for housing abundance. This white paper tries to, Congress should modify credits nearly 1.6 million housing over 10 years. Key Texas bills. We have to look at Texas. Here's another one. You see OFA, big one. That's where we're at. LIHTC. If we just type in LIHTC, Hunt Capital Partners closes 778 units, affordable housing stock. Let's see here. Hunt Capital Partners called the Hunt Capital Partners Tax Credit Fund 51, 1,200 units across the country, largest multiple investor fund to date. Nonprofit and for-profit developers, 700 units. Hunt focused on affordable. Federal and stat raised more than $3 billion in tax credit equity since its inception. So we're going to look to see if Hunt is the largest. And these are the kinds of people that you need on your sponsorship team. Let's keep the conversation going. Context, 1,200 master investor, AMI, 30 to 70. The lower you can get the AMI, the better. This is the largest single tranche LIHTC raises of 2024. One of the largest. Ohio remains a top 5 to 7 for overall LIHTC output, especially in preservation and rural markets. We are layering on the cake. We are just getting started, okay? Florida, strong 4% pipeline. Efficient state, rural ownership, major 4% in smaller cities. Top tier, 4% bond, OZ, TIF, live local. Why it matters. Your Circleville, which is where I'm at, OZ and other layering. We were looking for Ohio-based 4% ESG. Largest LIHTC deals USA history. Let's take a look and see if we can beat it. I doubt it. So you see who these are. An international sovereign wealth fund and Blackstone working together. So if I'm the new Blackstone, this is 11,000 units, 5 billion financing, Fannie Mae, Wells Fargo. 5,000 were preserved, middle income, lower income. How large scale? Institutional level partnerships, public-private collaboration. Give me the top 10. If Blackstone's involved in affordable housing deals, that's what you need to show people and how many millions of square feet it was. New York, 1,600. Redstone Equity Partners Fund 113. 200 million in equity. These are all equity. We're looking at equity growth. Hunt Capital Partners, WNC. It was built and rehabilitate. Why do they focus on rehabilitation and not new construction? Why do affordable housing? It's probably more of it. Rehabilitation. Often 100 to 200,000 a unit versus 300 to 500, which isn't true in our market. We can build a unit for 130,000. Lower development costs, easier to close the capital stack with equity and soft debt. Critical for investor. Preservation mandates. Many public housing are aging out of affordable covenants, and the preservation's qualified allocation place. Investor preference, low entitlement risk, permits already in place. So this shows that if institutional investors in LIHTC prefer low entitlement risk, so if you can entitle it, that's everybody. Permits in place, known tenant populations, a predictable path to 1-year tax credits. Regulatory advantages, Section 8, RAD, Capital Fund, optics. We still desperately need new construction. Rehab preserves, it doesn't grow the housing stock. increasing soft subsidies, encouraging mixed income or live local. Here's mine. If you're unlocking raw land for 4% LIHTC deals, you're creating a rare greenfield affordable housing opportunity that has scarcity value in the fund's portfolio. And if layered with PPPs, ESGs, and incentives like this, you can de-risk the deal enough to get investor buy-in, even if it's new construction, which is what we're doing. Okay, so let's see here. Let's go back to this. We're gonna open up a we're talking deployment here because nothing gets things more excited than. So this is LIHTC deployment. $194 million. We're just putting articles together. LIHTC, and we could type in enterprise. And those look like new construction for families in Salt Lake City, which Enterprise Housing Partners Fund, EHP 45, generate 3,800 jobs, 500 million in wages, tax revenue, and 249. Low income tax credits has been the cornerstone. EHP raised 180 million, and it will create creation and or preservation. Florida, Georgia, Louisiana, Utah, and Washington. No idea why they Stanford Place and Dayton will involve the preservation of 100. Look at that. Look at them deploying into the Ohio area. The renovation by Fairfield Homes will focus on that. So you start to see this. Okay. Ohio's in the headlines. 407 million. That's a lot of money. Let's keep looking here. OFA board, 1.75 million development loan for a 9%. Churchill, co-developers, residential construction. These are very low amounts. We don't need any of these. 1 million of them to support the projects. These are the projects. In 2025, 120 million in tax credits are available as bond gap for rural projects. And so these are the areas. Rural Ohio is getting more. Let's see what this says into deployments. So ours is, how do we get, here's OFA. This is December snapshot. Funds utilized, 2025 state bond gap, finalists, largest single year state allocations nationally. Strong, WODA, NRP, Homeport, Wallach, National Church. Now we just I just approached National Church, Wallach, and NRP. WODA, I didn't because they're not national. And Homeport they don't really focus on rural. Clear comps. What is the by state allocation? Let's look at the allocation by state for LIHTC dollars. California, 100 million, New York. But how did Ohio get to 100 million then? Federal and state level Ohio LIHTC. Its own LIHTC program authorized by the General Assembly. It allows OFA up to 100 million through 2027 annually. And while the 9% significant, look at that. Can you map out state allocation and federal combined by state and see where we rank? So we're going to see who has, I think Ohio is still leading the nation. state level, comparative. California, the federal and state. Except how much is the state credits and total for all of these? That's a problem that you have to find trends. Top states, That's why we look at LIHTC deals, because these are, if you look at the development pipeline and the trends in Miami and where I'm from, here's another one. Let's check this out. Look at who's on your side. The governor. Let's see here. NRP has an office in guidance on 3 million national pool. Here's Ohio. State amount allocated. And this is going to be pretty representative of the marketplace. New York is up there. Texas. Unused credits. States that received unused credits. And we're going to keep looking here. Here's the hunt. Sinair announced a closing of Sinair Housing Fund for Housing Partnership 42. Multi-investor LIHTC Fund 1,400. It says creating or preserving 274 units. So you see Illinois, you see all the money. This is equity deployment checks. And you can see the amounts of money that we're talking about. And I would argue that I don't need to go to sovereign wealth funds for money, but we're still going to try. And you see that these are ground up or rehab, exactly the strategy. Scenario clearly open to new developments in public housing. 300 million to work annually. Who are the largest equity raisers for LIHTC deployment? So we are going to developments, but you have to look at where the money comes from. And these are some of these. Ohio Capital Corp for housing. Regional syndicators serving Ohio and neighboring states. So 28 billion in LIHTC equity was closed. 71% syndicated and 29%. Investor composition. CRAs. Is this more than all multifamily equity? We have to compare that to multifamily equity. How big? No. Let's break it down. 28 billion and multifamily equity, but you see how big of a portion it is. Market rate versus affordable. Family offices, foreign investment, sovereign wealth funds, pensions, LIHTC, total investment volume. Syndicated direct LIHTC investors. Even though LIHTC is a subset, it offers guaranteed tax benefits, stabilized returns, huge alignment with ESG. So while market rate may outpace insured capital, LIHTC remains the most policy leveraged and recession-resistant form of multifamily equity in the United States. That's right. So, how would I pitch this to a sovereign wealth fund? International. I'd probably have to pull on the big name deployments, etc. So what you got to do is Everybody who knows who Blackstone is. Global Pack. Here you go. And this is the largest. This is where mine is. Free money stack. This is everything. So we control the land. This is land first. We control zoning, timing, and the capital stack. Ground up or pre-entitled land is the entry point below builder basis. And we're talking about U.S. affordable housing is one asset class where sovereigns, pensions, and banks all agree. There's durable upside, tax advantage structures, and real political tailwind. Capital is already moving. Blackstone, these guys are not betting on trend. They're backing policy. Sovereign scale sites in markets like Ohio, where LIHTC awards hit 135 million last year alone. Now, we're still building our case here. We're just gonna do LIHTC. Let's keep looking. Key Bank, another one, because these are regional. The development is still regional, so you're gonna be talking to regional banks. We keep building ChatGPT's investment thesis with more data. And it can really just, we acquire before deals like Jalen Laws, and they're providing the financing. Everybody can provide financing. OFA board approves financing. Here you go. This is a much stronger. Boston Financial. This is what you want. These are the equity deals. This is equity. It comes before debt. And they have 16 trillion under management. That's pretty crazy. I don't know if you can beat affordable housing. Which is a top tier multi-state LIHTC deployment. 45% in minority communities. Job creation backed by Oryx USA. Sovereign linked arms, sovereign precedent. What is a minority community? Black, how it's measured. Most definitions come from that data. Now let's look at the one that I have, which is, we're gonna have to pull this up. We pitch a lot of these guys. Here you go. This is our development that we're working on right now. This is the incentive overlays that we're studying. And let's take a look. Is mine majority? I don't think so. Ohio's pretty white. But we'll see. LIHTC, OZs, is it minority? Let's check it out. I don't think so. Yes, give it to me for this tract. This is based on qualified census tracts. And then you have to overlay that versus available land. Circleville master plan site, that's what we're working on. QCT still does it. This economic designation can enhance it. All right, so it's not giving us any information. So we take in the Boston one. There's that. But this is a lot of money. Here's Merritt Community. Another one. 500 homes in California. A LIHTC fund, housing credit, tax credit fund. So the way that you organize a fund is you can look at it. how are these funds organized? Tax credit funds, they have to deploy. So if I'm looking for deployment and sponsorship, I probably need land control or a co-development sponsor. West Coast, rural, senior, disaster, nonprofit, special needs. You see that? I'm just building your development knowledge. You're creating a seriously powerful developer brain trust. Institutional fund intelligence brief. Yes, this is mainly the tax credit equity funds for LIHTC deals. They probably will deploy. So you have to talk to LIHTC organizers, Boston Financial, Enterprise, Sinclair, Ohio Capital Corp. Capital Stack, what they're backing. Okay. So we're going to keep looking. The largest. You see how they have to deploy across. So it looks like they've raised more than that in equity. So these are capital Redstone Equity Limited partners. So we're looking at how the funds move. So why wouldn't they just deploy into, let's feed it this. But these are serious money. Redstones, and it brings your intelligence. Total equity over one above your top. Boston, Hunt, Merit, Redstone, 7,000 across 75 ESGs, all that stuff. Okay, so these are what you have to bring in. LIHTC collateral. Here's a new instrument. We just keep feeding it information. And debt liquidity. Even more firepower. Community banks is co-lenders. Small LIHTC sponsors who need permanent debt. We're just feeding it. This is you see this. This is recession-proof development. Oh fuck. I didn't mean to do that. All righty. Merchants Capital. Skip. We're gonna keep looking. Righty. And you see a lot of these news is coming from the same one, right? So as you get closer, housing finance, right? LIHTC rents average 38% lower. Texas awards. Let's keep feeding it. We're showing it by states as well. Ohio has one of the largest funds, Ohio Development Corp. And we're just building an investment thesis to back our regional development. If you're in the Midwest and you're not doing LIHTC, Boston Financial. This might be the same. So a lot of the times, and then what we want to do is, I keep doing that. I could do this for Florida, you could do it, but this is how you use. We're going to try LIHTC, Ohio. This is one of the biggest guys right there, and probably Ohio's largest. So their first question is going to be, why haven't you talked to um this group right here, right? Whoops. We're just looking for Ohio Live Tech. We're looking for affordable housing. We're trying to do the largest affordable housing development in Ohio's history. And it's just good to have something that people can read. It's just like, hey, if you want to read about affordable housing, deployments, Key Bank, right? So we're building a little bit now the case for Ohio. I said, I'm building your Ohio backing now to be stronger. Funding overlay, syndication by region. That's what we're trying to do. So we got that. Here's another one. Every month, this is coming out. Active Live Tech deals by region. Major Columbus area, service riching, 9% layered, repeat developer, Wallach, Fairfield National Church. And Penrose. If it has Ohio Millions and Live Tech are affordable, let's see what it says about this. So how do you, what sponsorship team? Double dipping? This is a little bit older. But if you're in a capital market and you have to raise and deploy capital, and Miami's an interesting place. You know, a lot of the guys land first, state versus federal incentive stack breakdown. We're not quite there. Here's another one. They are raising like crazy. Ohio Capital Corp for housing. So you can see that a lot of the news comes from housing finance, which is great. A lot of people, it seems like there's a pretty consistent um sometimes there's a little bit. So banks are investing equity into centralized development corps that deploy. Let's see here. 11 developments, 28 million. We're looking for more recent stuff. DeWine's 400 million tax credits could be a game changer. This might be old stuff. You know, the governors are normally the ones pushing this stuff. WODA, OFA, Ohio Realtors, 21st state with a dedicated affordable housing. That was in 2023. But we're just building a case for Ohio. Okay. So that's why we need more recent stuff past 1 year. Tax team series. So if there's tax guys talking about what you do, then you're in great shape. You can get behind the biggest affordable housing guys that are out there. This is rural Ohio. Here you go. These are really small. And that's the benefit of using. See, it's like, I don't need any more, but I'm going to keep feeding it. Key Bank, we're going to keep it coming. It looks like some of these are pretty repetitive, but we want to make sure. But you can see who the players are. Key Bank for us to work with. You see how medical firms, this is the public-private, this is triple Ps. You see how Cleveland continues to lead some of these. This is for ground up. You can see the deployments across the AMIs, co-develop, and you can look at this stuff. This is, you would want to talk to some of those guys. 10 developments okayed for affordable housing. McAfee site in Ohio City revealed. OFA approves financing for financing. Cleveland YMCA for domestic violence survivor housing in New Miami. What's that? This is what we're talking about. But you see if the YMCA is on here too. We're going very wide with ours. Ours is meant to be $1 billion affordable housing development to affect all income. So what I would say is if you could take all of the national equity and local equity, our goal is a $1 billion project. And if you look at the development values and breakouts, we want this to be more than 60 to 70% affordable and reach all classes like this for the Circleville one, 88 acres. The point is to highlight institutions, investment, high level, and a sample development plan and write-up for how to apply these trends in Central Ohio. The whole point is a 2 or 3 pager for institutional level sovereign wealth funds, or why sovereign wealth funds would invest in these types of projects. And sample capital stack. Affordable workhouse market, public use, economic anchors, which is what we've talked about. Boston have closed over $1 billion in LIHTC equity. University hospitals are deploying. Ohio State, Athens County, Y Circleville, 40 minutes. They shouldn't be focusing on that. QCT, 30% basis, direct opportunity zone, proven appetite, call to action, pre-map incentive overlays, which is this. And what we want to show is site selection. It's an example site. Land development starts with site selection. Land development starts with site selection and tie-ups. We do entitlements with land gain. Our basis on the land is sub 3 million with entitlements and is the following. This is meant to convince institutions locally and internationally, a 2-pager on the allocation to LIHTC equity, and they can skip the line and control the land. So deployment, I would say, becomes the problem. Pre-entitled for land allocation, 1 billion master plan, de-risk fast track. So step into a shovel-ready LIHTC carve-out. Now it can't be under 3 million. They probably could have, but this is in a lot of these. Triple stacking. Now what we have to do is put in that's our LIHTC deployment. We have to look at, let's see here. Here's a term sheet that we made to some of these affordable housing developers. Here is a terms sheet we looked at for co-sponsors, but it talks about the development. I think you have to show how much tax credit equity we can get total. So how much are they able to deploy? For them, it would be about deployment value in millions and the size of this development. I think we could do more than 1,000 units and deploy a fund's entire budget for at least 50%. Recast the LIHTC equity deployment. It's the affordable housing stack. Senior, HUD, and supportive housing. Secondary core 4. Now, if you look at this, LIHTC deals Ohio, largest. If we go to OFA, we're talking about 4% deals. We want to show what could this this is exactly what we're talking about. We're getting there. Except we need to go to the finals. We're pulling in directly the LIHTC language now. Let's see what it says. $1,000 plus entitled land value, tax credit equity deployment capacity, 50 million. 25 to 50 million of 4% in one medical retail. There you go. So you have these tracked in the county DDAs, eligible basis, 50 to 60 million. LPs gain site control, yield access, institutional ready structure. Now you see supportive, which is what we need. Only one of the only 1 billion. We're looking at the eligibility. Skip the line, front of queue, robust, overlays. Let's talk. Now, let's look at the awards. Let's just see if this helps. We're just giving it information. To anchor LIHTC equity deployment with that, we haven't secured land control and entitlements for tax credit optimized yet. It's that's crazy. Sample phase, eligible basis, annual credit, total credit, equity, 50 to 60 million, full 1,000, 75 million. Prepackaged deployment, future BTR, total modeled equity, $900 million, 1,500 units. So we're introducing site selection. Let's see here. Assisted living, containment, underwriting guidelines, design standards, pending applications, and funded projects. 2025 LIHTC. Now, it can take all of this data and model it out in 1 minute. That is the benefit of can you use any of this by unit sizes, rural versus urban, etc. Can you use what it gave? We'll let it think. Appalachia. We're looking to see if there's any in Pickaway. They only had 1,000. There was only 14 projects. The largest was 260 right here. Non-competitive 4%. Failed. You can read it. Senior general, community real estate, rural, 3 rurals, 3 metros, a lot of rural competitive scoring. I think, let me give you a little more. Let's see what we can find. There's nothing in Pickaway. Here's the summaries. LIHTC, new affordable senior, preserved affordable service, new affordable metro, new affordable rural. So there's a lot less rural. Let's see what it says. Yes, let's do one for Circleville. I'm just giving you as much info as possible. I would say that Circleville would be considered rural. It seems like we could do several of the largest across sectors. I think we need to be representative of the market by unit cost and project size. What do you think? So carve out across total and then show total development value by affordable housing guarantees and all segments. And some may not be, but like alcohol or drug rehab or adult special needs, etc. All development. I want to max out the 4% classes by each sponsor group. So what we're trying to do is show the maximum affordable housing impact and equity placement possible. Yes, and show how it would work on 88 acres. What would be the max affordable housing carve outs? So we're looking for the maximum affordable housing carve outs. If we went across the board using real development proposals and data that we have, how can we model out our development to fit that? How many acres would it take up? What if we build a parking structure? Can we push the density even more with green space? So if we build a parking garage and consolidate it, let's break it down. Family, senior, supportive, recovery, workhouse, assisted living. Assume density, a typical surface, saves. How did Miami get to 5,000 on less acres? Can we use that? Vertical. I don't think we can get that. I don't think we can get more than 5 stories across the board. What was Bridge Park height? We have a development called Bridge Park that was $500 million, and they got it the same way by building consolidated parking, 4 to 6 stories. 6 stories, certain places. Bridge Park, yes. Yes, let's model it off of Bridge Park. But as much affordable as possible, and then do a development layout overview and show institutional equity placement and overlays for incentives. This is a few pages for tax equity funds to place. So you have to look at who they place their money with, and it's traditional affordable housing developers. So on this example here, let's check it out. Affordable and equity. So what if we did all affordable? How many units max could we get? I think that's a lot stronger than any kind of market rate. I don't think we could get more than 5 stories. and more than a 2 FAR. Let's see what they said. What we are doing is showing land selection and gauging institutional level interest in these areas. We are looking for sponsorships right now from the top 5 housing affordable developers, but also gauging it at institutional level equity placement. This is meant to show how we are studying record breaking affordable housing developments, and you could phase that, but I think trying to get the gross square footage and make the entire development PPP and all national groups and carve outs for all LIHTC show how we would carve out the master plan. And also it still probably has to be mixed use like the one in can you we can say what would total development value be? 2 billion. 200,000, 600 to 800 million potentially. Yes, and we have to negotiate. This is pre-entitlement and site selection and feasibility. We are looking for soft commitments and building the sponsorship team, including attorneys, zoning, development, construction, equity, and debt. So this is early value studying. Do you think this would be too lofty? Should we do 4 stories instead? Let's see what it says. Our LIHTC deals 5 stories. That's a question. I think lowering it to 4 stories for stick built, and I think it matches 3 or 4 stories and carve outs that are digestible by multiple groups, and I think we could get there. I think maximize units, but surface park does tend to be common. But I think in this case, we could double the utilization if we have a centralized garage modules with, and we look for parking to be in garages placed throughout the place. Look at Grandview Yard as an example. So I lived in this place called Grandview Yard that had a lot of that stuff. They had more than 1,500 units, and I think they only had half the space. How does this match Grandview Yard? They were 4 stories, I think, and on a large acreage, and all parking is in the garages, and there was medical, grocery, etc. I take out all. So if you look at Grandview Yard, I actually lived at Grandview. They had big pools, amazing place, fun place to live, lots of single family detached condominiums and master plan community, probably done by one of the best. We're looking at total equity placement though, if we do all affordable housing based and workforce housing with jobs as a focus too. I think it has to be a housing first focus strategy. It at a 0.44. Let's just do the tax equity payouts created and let's do it. I think the actual numbers of acreage was smaller, but we are in early housing first strategy and we can always come down, but we are trying to get this at $1 billion. How many units would I need and how many square feet? If we want a $1 billion affordable housing development announced with carve outs across all of the LIHTC deals, how do you serve all of them? Total buildable. What was the development cost per unit in rural Ohio again? Wasn't it like 275K? And that'll tell us how many units we need. That's 4 per million. That would be 4,000 units is all we need to hit a billion. So I think you can provide sensitivity by FAR and show the total equity in the sensitivity and break it out for all LIHTC components by acreage bands. So I think we propose 2.0 FAR and we can always come down from there, but the purpose is feasibility. Go back to this, but let's target majority affordable housing and all affordability sectors like assisted, etc., all of the 4% related deals and show total development value by each group and unit. Break up the 3,000 to 8,000 units. I think the closest we got to it was a little bit higher up. Show me a 2 to 3 pager with institutions, all the LIHTC info from earlier. So who would develop it? Here it is. Let's see what it comes together. A pitch. Qualified census tract, opportunity zone, enterprise in a DDA. That designed as a record-breaking 4% LIHTC driven public-private partnership. It shows the total breakouts, affordable, supportive, senior workforce, training, civic and medical, hotel and retail, structured parking, interspersed across uses. Now, if we had to show the groups that were active from all the articles in Ohio as potential carve out joint ventures. You have to add a disclaimer You have to focus on tax equity placement. So we can go back here and look at some of the largest this was LIHTC deployment. So if I was talking to these guys who Pool Capital Corp, 34A and B, and if you could add them in, that would help. Also, if you could show how the tax equity, like we are pitching to the equity groups who raise this capital, that would be good. This was the most recent one, or Key Bank, but this fund and Fund B are the types of people we need to model out how they can place equity. So now we're trying to write this up into more of an Ohio based. Just show them we want to pitch to the groups who raise these tax equity funds to show the value, the ability to place. Can you place it? If you became, or if you signed on, or if you supported this, right? What we want to do is show how they could deploy tax equity across all these groups. Here are some of the people we would pitch to, but we're talking about LIHTC deployment. We are talking about LIHTC deployment for equity groups. So we have to show the development, overview, potential, co-development, sponsors, etc. We are building the sponsorship team. We don't have site control yet. It's feasibility first. Yes, write the pitch into a deck so that this would be all those groups plus the affordable housing groups. And I think you could do low end and high end FAR, which is aimed at a minimum of 1 billion. So if we want to do a $1 billion affordable housing development on 80 acres, it shows what we're after, the development sizes, the unit ranges, the entitlements, who we'd be working with. How would you rate this 1 to 10? It's a high level. I think what they're missing is again some of this stuff. We need to talk their language and add all those firms in here in a big list, easy to read, of who we are approaching, and write this as if we are all talking to institutions. So we're talking about incentive stacking. Don't have the site tied up, but yes, I want this to be a pitch that both the tax equity groups as well as the development firms for 4% could read and say, yes, we'd be interested. And then let's say, how would you rate this now, 1 to 10? Get the parking, but let's do a more polished to get it to a 9. Seems worse. What do you think? So we're just trying to get a high level here. This started with sovereign wealth funds. Let's see what we would rate it.